Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the market site in Times Square, New York City, we have Hunter Horsley. He's the CEO of Bitwise Asset Management. And our question is, will a Bitcoin ETF ever come to market? It's great to have you with me, as always, Hunter. That's the question. Yeah. Bitwise, you are in the process of trying to get a Bitcoin ETF into the market. Tell us about that.
Yeah, absolutely. So we initially filed earlier this year. On October 14th, we'll have the answer on whether a Bitcoin ETF will launch this year. We currently have the only live filing for a Bitcoin ETF. And over the course of the past year, there's been a huge amount of work that we've done to try and bring regulators up to speed to a place where they feel that they have the information they need to know if the mainstream is ready for a product like this.
Why do you think it's been challenging getting an ETF proposal through?
Absolutely. You know, I think something that resonates with all investors is that crypto is this new asset class, and there's a lot to be excited about, but there's a lot that's really unfamiliar, and the counterparties can be different, and you hear two different things from two different people, and it's just hard to know what to make of it. And people are busy with equities and fixed income and everything else, right? The world does not revolve around crypto. So I think part of why it's taken a while is you just need to parse all of the information out there and present it in a way where the facts are in front of the SEC and they can digest those facts. The other element of it is that the space has had to mature. Mm-hmm. The crypto and Bitcoin that people heard about in 2017, if you remember, the market ran way up and everyone heard about it and people were saying tulip bubble, and the market since 2017 is like night and day. Mm-hmm. There's a huge amount of maturation that had to take place. And is necessary for an ETF product to be possible.
We spoke about this at length in our panel at the trading show, and that was a consistent theme, that the equity market, the bond market, it's been around for a very long time. They're very mature. Their market structures are very mature. I think some patience needs to be exercised when it comes to the cryptocurrency market, because it's just not a plug and play like an equity market kind of structure. So at Bitwise, you talk about the real Bitcoin market. What is that?
Yeah, so a lot of the trading is happening on new exchanges that people haven't heard of before. Coinbase is one of them. There's another one, Gemini here in New York. And for that reason, it can be hard for people to know how much volume is there, how much liquidity is there in markets. And so we did a report back in March where we looked through all of the exchanges and trading venues, and we analyzed their reporting, and we found that 95% of the volume they reported was fake. And that's a little bit scary to hear, but the great news is that the real 5%, which yesterday was about $3 billion of Bitcoin trading volume in 24 hours, is mostly regulated by the New York Department of Financial Services. The vast majority has money service businesses licenses with FinCEN, the Financial Crimes Enforcement Network, and has surveillance programs. So even though there's so many unfamiliar names and new firms and brands in crypto, the analysis that we did looked and said where the action is actually taking place, where firms like Jane Street and Susquehanna are actually trading, this set of 10 or so exchanges is actually meaningfully regulated, seeking to have more regulation, surveilled, and so on and so forth. And so we actually put together a website, bitcointradevolume.com, where people can just see a very simple, what was the daily trading volume of Bitcoin, and you can also see CME futures.
All right, so another thing we spoke about, Bitcoin is a safe haven or a risk asset, because in August, when we had the pocket of volatility, it appeared that Bitcoin was operating as a safe haven asset. It's a very, very different story in September. Is it one or the other, or maybe not both?
Yeah, that's a great question. So I think a lot of people who talk about crypto and Bitcoin talk about digital gold and compare it to gold. Other people say, I don't think this is gold. I think this is an early tech stock. This is a risk asset. And those are sort of the two narratives, and people are on different sides of the fence there. August kind of gave us an opportunity to put this to the test. You had a yield curve inversion on August 14th. You had the yuan crossing 7 to the dollar on August 5th with trade tensions between Trump and the Chinese government. And what we saw is on the 5th, with trade tensions, the S&P was down over 3%, IWM, EFA down over 3%, gold up 140 basis points, and Bitcoin up 10%. So people said, look, it's digital gold, like we said. But then on the 14th, the yield curve inverts, the S&P comes down about 1%, and Bitcoin comes down about 1% as well. And people say, wait a minute, this isn't what we expected to happen from a store of value. And so what do you make of that? The answer is that it's really not cleanly either. We think it's most similar to gold, but not gold in 2019, gold in the 70s. In the 70s, the dollar came unpegged from gold, and there was a lot of disagreement. Are we done with gold? We've moved on. We've graduated. It's been around for 1,000 years. It's an artifact of the past. And other people said, no, it has a 1,000-year-long track record. This is an incredible store of value asset. And there was a lot of disagreement, so there was a lot of volatility in the market. And for the first 10 years of gold, it graduated from the 70s up 1,300%. 1,300% return out of the 70s for gold. One year it was up 125%. The next year it was down 24%. That doesn't sound like a stable store of value, right?
It certainly doesn't function like that now, that's for sure.
And it doesn't function like that now. So what was happening for gold in the 70s is there was disagreement of whether it would be a store of value or whether markets would move on from gold. And people were trading those views, and that created volatility. We exited the 70s, moved into the 80s with consensus about the role it would play. And since the 80s, the annualized rate of return is about 2%. So a very, very stable, boring store of value. Crypto is still in the disagreement phase.
Right, and that I want to wrap it up here.
Yeah.
Pull up our chart. This is crypto performance. It looks like the top most traded. There's a pretty big divergence.
There's a wide range here.
Right. Okay, one, why is that?
Yeah.
And do you think that it makes it harder for people to understand because of this wide range? It's not like there's stocks where, you can look at 7 stocks within a sector and you can relatively see why one's performing and one's not.
Yeah.
You can't really do fundamental analysis.
It's very challenging for people. So as you know, we manage index funds that allow people to buy the market. So they don't have to take a view on a specific asset. And I think that's hard because this, for most people, is a 1 to 5% allocation. And so then you say, within a 1 to 5% allocation, I'm going to have to break out a bunch of different assets and constantly be monitoring them. So for many investors, they'd rather just buy the market. Why is there a dispersion? Why do we see on this list different returns? It's because ultimately there are different stages of maturity. What you would expect from a small cap equity is different than what you would expect from a mid cap equity is different than what you would expect from Apple. So there are different stages of maturity. And in some cases, they're trying to do different things. So Uber is an app on your phone. And so is Google Maps. They're both apps, but they're doing different things. They're different products. Similarly, for cryptocurrencies and public blockchains, some of them are competing, but many of them are doing different things. And so we talk about them as a category, but many of them are trying to do different things, and so we see different performance in any given month. August was actually a particularly poor month, and as I talked about, we saw it perform well during trade tension, but more poorly during the yield curve inversion. But year to date, Bitcoin is up over 100%. And so it is delivering over longer time horizons on this continued, though volatile, drumbeat of positive returns.
All right. Thank you so much for joining us at Market
Absolutely.
And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.